Hi everybody, it's FIBO Group and you are watching to the Market Watch review. The Federal Reserve's more hawkish tone continues to impact the capital markets. Stabilization is difficult for equity markets. Today's strong greenback has been primarily felt by the Scandis and the dollar bloc. The weekly gain of the dollar against Norway ranges between 1% and 2.7%. The rates of most emerging market currencies are also lower. Rising yields are reducing the appeal of gold. It reached $1,858 earlier in the week and now stands at $1,786. It appears to be testing the month's low at just $1,783. March WTI is still quiet as it finishes its sixth consecutive week of weekly advances. Today, all sectors trade lower in Europe's Stoxx 600. The U.S. futures are mixed with the NASDAQ performing best. Asian-Pacific market. Next week, the Lunar New Year celebration will see Chinese markets close across China. The January CPI in Tokyo was disappointing. The headline pace fell to 0.5% year-over-year from 0.8%. Rising U.S. yields have outpaced equities, driving the dollar higher against yen. Today marks the fourth week-end advance. The dollar had only risen against yen this month 4 times. The greenback ended last week slightly lower than JPY 113.70 and now is in the JPY 115.70 region. The Australian dollar has fallen below the key support level of $0.7000. Although it has shattered it once before, it has maintained a close basis since July 2020. Technically, a convincing break could indicate a medium-term move towards $0.6750. This year, we have already seen some false breaks. Market of Europe. The preliminary estimate for January CPI will fall by 0.8% on the day that the ECB meets next Wednesday. This would reduce the year-over-year rate to 4.3% from 5.0%. From 2.6% at the close of last year, the core rate could fall below 2%. This will enable President Lagarde not to succumb to the hawks. The sell-off of the euro has been extended to $1.1120. It was close to 1.1485. Sterling consolidates this week's 1.25% fall at $1.3380. It is hovering at 1.3400, which corresponds to the target for the retracement of the rally that began from the December 20 low close to 1.3175 to 1.3750. The Bank of England will likely hike next week, signaling that it is ready to allow the balance sheet to shrink too. Market of America. Today, the U.S. releases its Q4 employment cost index. The Bank of Canada appeared as hawkish than the Fed. A March rate increase is as certain as it gets, and the balance sheet will likely come into play fairly quickly. The Canadian dollar continues to be traded. Yesterday, the greenback climbed above CAD 1.27 and is now pushing towards 1.28. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.